Breaking news. Tonight, the news came out that the Fed has cut rates to 0%.
Yeah, big news. So.
Our phones have been blowing up. We've literally gone airplane mode just to be able to shoot this video. So the Fed cut rates to 0. If you hadn't heard, now you know. Big news. It's good news.
Great news for the economy, for everything.
It's going to help the whole country get through coronavirus, and it's going to especially help the real estate market, make sure that we keep going strong. Let's jump right in. Jonathan, what does the Fed cutting rates mean? I guess we should say that's why we're shooting this video.
Yeah, and if you haven't noticed, we're at Austin's house Sunday night, but we wanted you to get some great info as fast as you can, so that's why we're putting this together. And so the Federal Reserve made a rate cut.
Yep.
And so put that in the picture frame that it is the federal government controlling the reserve, their rates. And so the free market enterprise that we have in the United States is where all the banks and lending institutions sit. And so we're looking at the money that those institutions borrow from the government.
Yeah, and so there's a lot of confusion. Obviously, it makes great headlines when the Fed cuts rates because it's a big deal.
Yeah.
It affects everybody, at least indirectly. But what it doesn't mean is it does not mean that mortgage rates were cut. The Fed's rate is the rate at which the financial institutions borrow their money from the Federal Reserve. It's not the rate that you're borrowing your money at from your bank or your lender. So that's something we get a lot of confusion, and we get it. It is confusing if you're not in the industry, but that's just basic mortgage pricing 101. The Fed does not control mortgage rates. It has one of the largest impacts on mortgage rates, but it does not control the rates. So while it's good news that the Fed cut rates to 0, the bad news is that does not mean you're going to be able to get mortgage interest rates at 0 unless
100% down payment.
You do 100% down payment, we can give you 0% on that.
Burst your bubble there.
Yeah.
So no 0 on mortgage rates.
No, but it is going to have an effect on them.
Exactly. And so
Jonathan, let's talk real quick about one of the things you like to mention about how the banks make their money.
Yeah, so you got to think about a bank's key business model is to service mortgages. That's where they make their money. And lending institutions like Austin and I, we are originators. So banks don't like to originate, they like to service. It's a lot better, more sustainable business model for them. That's where they make all their money. But guess what happens when everybody refinances, right? You're paying
servicing's cut off.
Exactly. So the banks are no longer servicing that because you paid in full, and now another institution has your mortgage. And so they don't like it when loans get paid off.
That's right. And so one of the videos we're about to put out this week is about when to lock in your interest rate. And excuse me, drinking Topo Chico.
All good, man. We got our Topos. Let's show them up.
Topo. Mexico. America. All right. So one of the things that we talk about in the upcoming video is about how rates move. When they come down, we say they come down like a feather, but when they go up like a rocket. They shoot up. And so we saw several weeks of rate softening leading up to 2 Mondays ago, and that's when we started locking in everybody, because we got down to bottom, and then rates started shooting up, and they've been going up for the last 2 weeks. Hardest I've ever seen in my career. And so we were not locking anybody for several weeks because we saw it coming down. Started locking everybody. Rates have jumped, and then now the Fed's cut rates, and we're expecting that rates are going to have the ability to come back down again. So let's talk about, was this expected?
Absolutely. So the thing to know about the Fed is that they meet every 2 months. It's not like they randomly get together and they're in some secret room and no one knows what's going on. There's a lot of analytical data, there's a lot of research that goes into what's going on with the economy, and so these meetings are on a regular cadence. And so I like to think of it like this: every April 15th, most publicly held companies report their Q1 numbers. So if a CEO of a publicly traded company came out, say March 1st, and was like, we're going to miss our Q1 numbers by 20%, January, February were terrible, that stock's not going to wait to April 15th when their P&L comes out to go down. The day that CEO makes that statement, maybe it's March 1st, that stock's going to drop down. It works the same way with the Fed. in January and February, we're seeing coronavirus move forward. We're seeing some of the unrest in the Middle East and oil, and so we knew that the Fed was likely going to cut rates in March. And so a lot of that was based in the pricing that we saw 2 weeks ago when we hit the all-time low. So some of that's kind of baked in already, but they made a cut that was really deep.
A little deeper cut than what we were expecting. So I think we'll see rates soften again, most likely back down to where we were 2 weeks ago. I think that's a reasonable expectation. They could go lower, but like Jonathan said, the banks make their money on servicing. So they don't want to see rates go below certain thresholds or they can't make money. And so they're not going to give you 0% on your rate. They're not going to pay you to have a mortgage. So there are going to be hard floors across the industry. We felt it 2 weeks ago. They really didn't want to go below those floors. We'll see if they're willing to go below these floors now that the Fed rate is at 0. It'll be interesting to see. So let's talk about what you should do. If you're a homeowner, you're in the middle of a refinance right now, you locked in 2 weeks ago,
I'd be praising and being cheerful. I mean, that's an amazing rate. 2 weeks ago was at an all-time low in our nation's history. So, I mean, I would keep moving forward.
Yeah, absolutely. Stay the course. If you locked in the last week and everything, we could see some stuff tip, and keep an eye on it. Be in touch with us. Or if you're not working with us, you should be working with us. But if you're not working with us, be in touch with whoever you are working with about what the policies are around with letting your lock expire and being able to relock, that type of thing. Should rates drastically improve enough? But if you locked in 2 weeks ago, the good news is that rates shot up since you locked in, and so rates have to come back down. They're not going to get down super fast. They've got to come down slowly, so we'll see what happens. If you're purchasing, what should you do?
I'd be very excited if I was buying right now. I think the best time to finance a home is when rates are at an all-time low like this, so I would keep looking. And
no doubt.
I certainly wouldn't buy a house just for the sake of low financing, but
if you are buying a house,
stay the best time to finance. Absolutely.
Yeah, and that's something that we want to kind of put in your mind if you're a realtor and you've got some people that are iffy about moving forward. Pretty much everybody out there knows that once we get past coronavirus, the economy is going to come roaring back and everyone's going to be wanting to get in. Now's the time to get in. You should be buying when people are selling when people are buying. Right now, everybody's selling from a market standpoint. So in the real estate side of things, if you can buy right now with rates this low, you really should. So remind your clients of that. But one thing we want to talk about before we let you go is, and probably almost the most important thing in this video from a real estate standpoint, turn times.
Yeah, absolutely. So all the institutions, all the banks have seen their turn times double, if not triple, in underwriting and in appraisal as well. And so there's just been a lot of strain on back office operations. Thankfully at Network Funding, our VPs, our leadership, even our own branch, we've been being very flexible, moving things around, being strategic on purposes, maneuvering all the right resources in place to try to handle some of that. And we're still doing 10-day closes, by the way.
Yeah, 10-day purchases. And so that is really important. Appraisals are getting slow, underwriting's getting slow. Jonathan was talking to the CEO of a brokerage here in town that told him that they've got a deal that the lender called and said they need a 30-day extension. Y'all need to be prepared for that. What we do to help mitigate against that is we prioritize purchase business. We're not locking any refinance on anything less than 45 days. So we're pushing out the refis so we've got more time so that we can continue to prioritize the purchase business. Network Funding is staffing to be able to maintain 48 to 72 hour turn times in underwriting, and we are not getting rid of our 10-day closing options. So keep that in mind. We're here to help make sure your purchase deals stay top priority, and we're taking care of all the refis as we can. It's crazy.
That's right. So the second boat's coming back around this week, guys. So hit us up.
Get your application in. A lot of realtors, I know you guys have been busy, and maybe you didn't have time to get your applications
in. Your own personal house.
Get your apps in now. Send them in to us. Let's get your stuff in, and then whenever rates hit that bottom again, we'll be able to lock in and you'll be in a good spot. So give us a call if you have any questions. We're here for you guys. It's going to be a wild week. Let's go.
All right, see you next time.
Woo!